Good morning. It's Friday, June 14th, about 6 a.m. Central Time. Overnight, the precious metals are snapping back a bit after yesterday's sell-off. You got August gold up $25 at $23.44. July silver up 23 cents, $29.30. I suggest trading the September contract on that one. You also do have copper, platinum, and palladium all unchanged here, so it's kind of stabilizing these markets. So a lot of times when we get the kind of market action we saw this week, where it seemed like last Friday we were down $2 in silver, gold was down $70. You got a major sell-off here yesterday in the precious metals markets, and it just feels like you're just being ripped and torn apart in every different direction. What you want to do is take a step back here, look at the forest, get away from the trees here, and look at where are we at. So on the week, gold up 1% on the week. Silver only down 0.5%. S&P 500 up 1.5% on the week. So what are you throwing a tantrum about here? So you look at the markets, and if you're getting chopped up, if you're getting diced up in these markets, because if you look at gold, it's higher than yesterday's high. This could be the highest close on the week for gold if we close at this level. So what I'm saying here is that if you're getting diced up in the metals markets, chances are your position sizing is off or your strategy is off given the size of most likely your trading account. So remember that there are 1,000-ounce silver contracts, 2,500-ounce, and also the 5,000-ounce contract. I see a lot of people with $20,000 to $50,000 accounts, and they're trading that large silver contract, and they're trading multiple contracts of it. And what happens is you get a $2 sell-off. Well, even on a $50,000 contract, that's going to be 20% of your capital that you just saw leave the account here. And then if you get a dollar sell-off again on Thursday, then it's another 10% sell-off on a 50 grand account. Now the reality is that if you get the position sizing right, you get the direction right, you get the strategy right, I think it makes futures trading a very valuable asset class because of the benefits. You get the leverage, you get the 23-hour access, and remember, many of these moves have happened on Sunday nights. Sunday night, we've had explosive moves, especially with the geopolitical tensions over the weekends. So looking at these markets here, what I'm trying to stress is that position sizing and strategy are some of the most paramount things when it comes to futures trading. And somebody who only trades ETFs, a great way to segue into it would be to fully fund the contract, just similar to how you would trade the ETF contract, or only use 50% leverage and start focusing on the 10-ounce gold, the 2,500 pound copper, and the 1,000-ounce silver. So you can also do calculated risk option strategies, and I love to help you out with that, as that is one of my fortes. Now, overnight, we had the Bank of Japan. They went through and they're making investors wait here, and they're making a case for its reduction in the bond buying. So traders were a bit surprised on their decision to flag a cut on its debt purchases without laying any kind of real strategy as far as normalizing their policy. Remember, they're still the ones that are like basically in a negative interest world when you got the dollar index here exploding higher. You've got the euro currency selling off dramatically. So there is divergences between these different central banks. You've got the US holding higher for longer. The Fed seems to be quite hawkish. Only one interest rate cut priced in this year. You go over to Europe and they're already starting to cut rates. And then you have some additional news that comes out where France is holding these snap election and things like that. So you're getting the euro currency continue to sell off. So if you like gold and you want to see gold at all-time highs, you look at it against the euro currency, and it's making those all-time highs. Gold's making all-time highs against a lot of different foreign currencies out there. Just you have to look at beyond the dollar index here. So one way to strategize may be to consider a bearish position on a foreign currency while long the gold contract, and you take out the dollar aspect of it, and that's how you get gold at all-time highs in different currencies. Now, there are a lot of different markets that we're looking at here today. We do have a nice little snapback in the oil market. Oil's been holding a trend. It also has been a heavily shorted market where it is pushing to the upside. Corn is a contract that we're looking at that you've got weather-related issues, too hot in the north, too hot in the south, too wet in the north. Then you have this taxation that's going on in South America. China is starting to buy U.S. corn products. Also, we've seen open interest come down dramatically, meaning that people are starting to short cover. The funds are starting to short cover in the corn market, and then you get the move back above the 50 and 100-day moving average. So if you're having problems in some of these metals markets, I suggest looking at other markets and trying to build a more broad, diversified portfolio is what I would say. Sugar's another market that looks like it's breaking out to the upside. So really, when you break down back into the gold market, you want to see it retrace that June 7th sell-off. That's where it had the $70 breakdown. We get back above that 2400 level. You should see another run to 2415, and then they'll start talking about a potential new all-time high in dollar terms. You need the DMI plus to cross over the minus. Often that's a leading indicator on the technical charts. Everyone should have that on their particular chart, along with average true range, which is $38 a day. You get another $38 move higher, we're going to be close to the 2400. You get two upward normal moves, which is what we're looking at with the average true range, $38. You're going to be right back near those all-time highs. Silver could easily, with a $1.11 average true range, we get the close back over 29.14, back over the 50-day moving average. We get a normal move higher, which takes it back above the $30 level. You string it up together two of those types of moves, and bam, it's going to be party on. Silver squeezes back on. Everybody's going to be calling. My phone's going to be ringing off the hook. People are going to want to buy it silver, and they don't want to buy it when it's down $2 on a day. They only want to buy it when it's making new highs on the contract high, which I find hilarious. So today we do have one data point that I will be watching: the University of Michigan, the consumer sentiment and the inflation expectations. So that comes out around 9 a.m. Central Time. That will be the big mover and shaker, I think, for the precious metals markets here today. You got any questions, give me a call. I'll be on the Schwab Network at 2:40. That's going to be a normal spot going forward. They've kind of penciled me in permanently for that particular spot. You got any questions? Other things that we're looking at: December gold 35.40 call spread. If you believe that, or I'm sorry, silver 35.40. If you believe that silver is going to go to $40+, I think that this could be a play with 164 days expiration. We will be advising that to many of our clients out there that want to have participation in the silver market, but they get very upset over these moves where it's $1 up one day, $1 down next day, $2 down last Friday. So I find it all funny. You got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.